here in the early going. The S&P 500 up 0.2, Dow's up 115. Tech lagged, the Nasdaq unchanged after consumer prices come out up 5% from last year, which is a moderation from what we have seen at the 6% level, only a 0.1% increase in the month of March. So, 69 is our trading session. Three big movers we're watching right now. First off, Microsoft. Goldman Sachs calling the stock a top this morning, while Reckless raises their price target to $315 from $290. But look at Emerson Electric slow.
All right. Hey guys. Everybody, how are you today? Okay. Crazy morning already. Let's just review a couple of things very quickly. First of all, Bank of Canada just came out with their interest rate announcement. As expected, they left rates, just double check. They left rates unchanged, okay, at 4.5%. That's what they were anticipating. Haven't looked at the statement yet, so can't really tell what's going on. I have a couple of Canadian pairs up here just to see what's happening. So Euro CAD right up here. We have US dollar CAD is right over here, and we have CAD Yen over here. So right now, immediately, we're looking at some Canadian strength after those numbers. CAD Yen pushing up, Euro CAD pushing down, dollar CAD pushing down. You got to let this settle for a little bit before we rush to do anything. The number came in exactly as expected. Let's see what happens as the market moves. Let's just see. I mean, I was concerned after, right after an interest rate announcement, let things generally settle. The biggest reaction clearly is dollar CAD. So let's just take a look and see what dollar CAD looks like, get our bearings. And let's do what we normally do. Now, we're not going to rush to trade right this second, okay? First of all, we had CPI this morning, which we're going to get to, because that really threw the market into a continued unsure state. We'll get to that in 1 second. Let's just look at what's happening right this second with the Canadian dollar. Here's dollar CAD. Let's analyze very quickly. This is how we start an analysis, okay? Well, here's your 15-minute chart, which is clearly pointing down. All right, especially we have a very key line over here. We have right up here, we touched it again. Okay, high before the low is right over here. Okay, we had one over here, key line, and right back up. Look at that to touch it. You see how important this is, even on a 15-minute chart. Okay, just take a look. This line formed yesterday. Okay, at 134.89. This was a key line that appeared on a 15-minute chart, dollar Canada yesterday, and we moved down and we trace up, and there is no shock at all. Okay, so look what happened. We had to move down. Look at just follow the big picture. Always open up things. Follow the big picture. Okay, we had to move down, right? A retracement up, a new move down. There was a line up here, okay, at one point, okay, moved down, retraced back up, moved down, retraced back up, moved down, okay? So when you open things up, get a sense of what is happening, try and avert some of the noise that's in the pair or any pair. And just look at the general trend, okay, where things are stopping. This was a very, very key area over here, as you can see. Not because we had the line over here, which we did, and we knew that coming back, if the dollar CAD was going to start to move higher, we knew it was going to run into some resistance over here. Look at that, right to the pip. We knew it was going to run into resistance. I didn't know for sure. Now, I wasn't watching it at the time, okay, but I'm just looking back at it now. I'm not saying I would have known exactly what to do over here, but it stopped literally right at the pip, right at the line, That's how important these amazing trader lines are. Okay. So, it doesn't get, look, and the point, I don't want to tell you that every time you see a line that you could just use a line strictly as a support or resistance. All right. I don't want to say that. I just want to say that every amazing trader line has importance to it. They do break sometimes. Of course they do. And new lines form. Okay. So these are guides. We're looking for these lines to set up areas of probabilities for us. Okay. These are not absolutes. Okay. Now, in this case, you know, you could have played against this line. Okay, you know what? If you like the scalp, you know what? You could have gone long up here a little bit. I would have waited until this red line, even on the 15-minute. I would have let this candle confirm. All right, which it did. All right, watch candles. Watch where they confirm. You got to watch closings of candles. It's very important where things are in the closings of candles. Okay, so just using dollar CAD. Now let's just say, okay, so we have a short bias clearly after the news, right? So what do we do from here? Well, we have the low of the day. Is it going to take out the low of the day? Let's look a little bit further up. Now, this is why I say, even though we're day traders, we want to see what's around the corner. So first, I'm going to pop to the 1 hour. Let's just take a look. All right, we have clearly the low of the day 2 hours ago. It's now approaching it again. Will this break? I don't know. But if you look at the stair steps that are happening here, the blue line's pushing down. Now look what happened. The blue line's pushing down on the hour. Okay, retraced up. See how it retraced right up to a key blue line? This blue line was set on this candle. Moved down, came back up, almost right to the pip to this blue line, and now started its move down again. We took out the low of the day. All right. At one point, this red line was the low of the day, right? But what do we know about the low of the day? One line does not confirm a low of the day. We need at least two lines, which would form a directional indicator before that gives us confidence that a low or a top, either a low of the day or the high of the day if you're looking in the other direction. So what did we have here? Okay, we had a red line right here. Okay, we stopped right up here. We did have a little bit of a red line here at one point. Okay, however, you can't go long because when this line was formed, we were right up here. Okay, so what happened? We came up here, came back down. And now we took out the low of the day. All right. So this low of the day was never confirmed. Now this line you have to ignore now. This line is broken. This will leave. This will move. Okay. This will be removed. This is now the low of the day. Okay. This line was broken. It's irrelevant now. All right. The line remains so that you can see as you're trading that there was a line here and that it was broken. And now this will stay for a little while. So as you're reviewing the chart, you can see for yourself that the line was here. Now, in a number of candles, it will finally just disappear. But just because it's still here, it really is a meaningless line at this point because it was broken. So please understand. And what we would need now on a 1 hour chart, we're coming down to the low of the day. Now, I'm not calling this the low. I don't care what the number is on the dollar CAD. Okay, I don't care what the news was. U.S. dollar, the U.S. had CPI this morning. CAD had an interest rate announcement. There's a lot of news out there. You're looking very, very, very weak right now. You probably want to be short dollar CAD. Okay, however, I know now by looking on the 1 hour chart that there's a key line. The low is here. Okay. I don't know that this is going to break the low. So if I was going to go short now, I have the low of the day right here that I have to take out. That's not a high percentage trade. Okay. And it's not how it works. Right now, on the 1 hour chart, we have to wait and see. Are we going to take out this line? Maybe we're just going to stop right here and form another line. Okay. That would be a very good directional indicator. Okay, then you put a long on, with a stop below this line. Now, by the way, this is assuming, okay, remember, this is assuming, all right? Now, this is why we have to wait and be patient. This candle came down, hit this point, kind of retracing a little bit. Does that mean that it's going to go back up? No. This candle could very easily resume the power down from here? I don't know. The point is, you cannot go short right this second, dollar CAD, because you're too close to the low of the day. I don't want to have to take out the low of the day in order to make my money. Because if you were going short, where do you have to put your stop loss? You got to put your stop loss all the way up here. Okay, right above this area. So if you just set up a short, just use the idea, okay, and you double click and you move your stop loss, okay, even above this line, your take profit is all the way down here. You can't even see where the take profit is right this second. Let me see if I could shrink it so that you can see where the take profit is. Can't even see the take profit. All right, let me just try one more time. Okay, here we go. Just to really, really tighten things up. Okay, sometimes you have to do that and be able just to see where the lines are. Okay, so here is your buy sell line right now. Here's the price. All right, you got to get all the way down here in order to take your profit, because you have to put your stop loss above this line. All right, came down low, retraced up, set a new low. That makes this a very, very, very key line. You have to put your stop loss here, which I did. And in order to get at least your 1-to-1 or 1.1-to-1 risk reward, you got to come back down here. Now, look at, if you're just looking what's going on, really tightened up. Yeah, the bias is definitely short. Look at this move. Look at this move. Yeah, we had this big move up, but this is all a retracement already. All right. And so again, even when you tighten things up, it makes it easier to see. Big move down, big retracement up. Okay, so here is your key line, but we have the low of the day right here, and I'm not ready to get short right here. I got to see what happens at that point. Okay, and this is how you analyze every single chart the same way. So even though the 15-minute, okay, look at the 15-minute, you look at the 15-minute, you're like, man, okay, I want to be short. I don't want to have to take out the low of the day there. Here it looks on the hour chart. I don't want to have to take out the low of the day. All right, look how powerful this red candle is. All right, this is obviously after between the U.S. news an hour and a half ago and now the Canadian interest rate announcement right here. I don't know. I don't have time because I'm doing the class. I don't have time to read what the monetary statement is. So I'm flying a little blind here. If you want to try and really get a sense of what's happening in dollar CAD, I can't sit here and kind of look and digest what the statement was from the Bank of Canada. I don't know if they started their press conference yet. So, I don't know. So we're left just watching the lines. So now we'll look at the 1 hour, look at the 4 hour, just to see, okay? Because if you're running, because look where we're coming down here. 4 hour chart, remember, period separators. If you don't have them on your chart, make sure you have these period separators on your chart. It's very good. 4 hour chart, it means the period separators are weekly. Okay, so this is the action for the week. Now we came a very, very, very big move down. Now look what happened here. By the way, this is another great, just look how it works exactly the same way on a 4 hour chart. Okay, just look at this beautiful ladder pattern, pointing down, pointing down, pointing down, pointing down. Okay, you could have put in, every time you see a line, you could have put in a stop above that line and a short. You could have put a stop in this area. You could have been going short in this area, directional indicator. Anywhere in here, you could have gone short with a stop up here. You would have made money. You could have gone anywhere once this became a key line, okay? Once this became a key line, this never would have been a key line, okay? We would have gone from here to here. Here. Why? You didn't really have any retracement in here. So this is a move down. This is your retracement. Makes this line key, okay? Once this line was formed, you could have put a trade in anywhere here, stop above here, continued your move down. We had a move down, a little retracement anywhere in here. Could have put a stop, trade here, stop above here, continuing to ride this down. Move down here, okay, line here. Once this line confirmed, you could have put a trade anywhere in here, okay, stop above here, continue this ride down. Okay, so all of these opportunities, and this is on a 4-hour chart, but I'm showing you this because it's the same. I mean, the pattern repeats, but you'll see a pattern like this on the 5-minute, on a 15, on an hour chart. Okay, but you always have to look ahead. Even if I was going to trade off of the 4-hour chart, let's just say I'm trading off the 4-hour chart. So what did we have? We had a directional indicator early last week, right here. What did the direction, right? 2 lines, right, close together. We set a low last week, moved up a little bit, came down, set another red line. That's our directional indicator. That tells me, okay, that we are now going to start a little retrace. Not guaranteed, not 100%, but the probabilities are after this directional indicator was put in, all right, you could put a long with a stop below the low of the week, rode this up. However, if you're riding this up, okay, which is very, very possible, where are you looking to make sure you're out? You got to get out this blue line, this key blue line high before the low was now a key target. So as long as you had room in here to put a trade on where you can put a stop loss in and yet get your take profit before you have to take out this key blue line, that's your trade. If you're looking at this now and you're kind of up in this area, you cannot go long up here, right? Just look at this chart. It's long, 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 right? You got a nice bullish move up. All the rest, we had a low last week. All the rest of the week, it's moving up, grinding up, grinding up, grinding up. If you were down here when you put the move on, you're great. If you were over here, you still had a good opportunity to get out before here. But once now you're already up in this area, you got to be thinking to yourself, yeah, this is a big push up, but I'm coming into a very key previous line. All right. And so if I'm long in this area, I'm looking to get out. I have to be out of that long. I have to have been able to make my money long before this line. Does that mean that this line was guaranteed to hold? No. Could this have continued to go through there? Yes. We're talking about probabilities. So probabilities, okay, and this is a very important chart. Now, I told you I was going to teach you guys, okay, 4 basic trading setups. So again, we're focusing on a 4-hour chart here. If it's early in the week, if you're trading now, there's nothing wrong with trading a 4-hour chart, okay? But if you're trading a prop firm's money, very important to keep this in mind. If you're trading your own money, as long as you have your stop loss in the right place and you're only risking the 0.25% that we teach, you'll have a small enough position in size. You can work off of a 4-hour chart. But if a trade on a 4-hour chart may take days or a week to play out. There's a long time frame. There's nothing wrong with that. All right. Some people are more comfortable on 4-hour charts. The problem is that, and I don't want to call it a problem, but if you're going to use 4-hour charts and you're going to be in a trade for days, okay, or maybe a week, and our goal is to risk 0.25% of the account to make a little bit more than 0.25% of the account. And so even if you're right, which is fine, okay, you're only going to make 0.25% of your account. So now you just stayed in a trade for a week. You tied up some money. You tied up some mental capital. It may have prevented you from doing other things when you look at other pairs. All these things are very possible to happen. And at the end of the day, after a week, you'll make your 0.25% on that trade. That's fine. Nothing wrong with that. It's just that if your goal is to make 0.25%, Wouldn't you rather make that in an hour than a week? Wouldn't you rather make that in a couple of hours than a week? Put on more trades, do more trades. Okay. Remember, okay, we're not in the market for looking to make points or pips. We're looking to make percentages. And this is a significant difference for most of you guys out there who have any kind of trading experience. People are always looking to how many pips can I make, okay? That's not our goal. Remember our theory. It's a way of trading, all right? Our theory is putting the odds on your side, getting in and out of trades, being right 55, growing it to 60% of the time, okay? Letting your stop loss hit, letting your take profit hit, all right? And building your business that way. It's like any new, try and remember this, okay? It's like any new skill. Think about any skill that you have tried to accomplish. It's something new, whether it's playing golf or a sport or any kind of a skill that you're learning. I did kickboxing for a while, okay, for many years. When you start off brand new in any skill, you have a lot to learn. How do you learn? You practice, you repeat, you do the same function over and over again. So you start as a beginner, and maybe as a beginner, and you're using the Amazing Trader, maybe as a beginner, you're going to do 20 trades, and for whatever reason, you're right 5 times and you're wrong 15 times. So what? If that's where your base is when you start, so what? It doesn't matter. You were working on a demo account. All right. That's the point here. Use a demo account until you build your confidence, until you see that you are understanding the patterns correctly, until you see that the formula actually works, that you get confidence, that you don't live or die on one individual trade. All right. We'd like you to do 100 trades a month would be a great target. Now, it depends. If you're looking to do this for a living, if you're looking to make a significant amount of money, the way we do things, you need to trade more often. All right. Because remember, we're in and out. We accept our risk, we take our profit, and then we move on. So if our goal is to be right 60% of the time, 60-40, okay, the more trades we do, the more likely you are for your statistics to play out, right? Just think about it. If you flip a coin, you know the odds are 50-50 on a heads or a tail. If you flip a coin 5 times, you can get 5 tails. If you flip a coin 10 times, you can get 9 heads and 1 tail. Who knows? Okay, you're playing probabilities. If you flip a coin 100 times, you're going to get closer to 50-50. Okay, for sure, because your odds will play out. Those are the statistics. The statistics tell you that the odds are 50-50 on a head or a tail. Okay, the bigger your sample size, the closer you're going to be to that 50-50. Okay, that's very, very important. All right, our goal is to get you to 60-40. Okay, it doesn't matter where you are right now. If you're a relatively new user, if you've tried trading before and have been unsuccessful, if you haven't traded at all and this is your first time trading, this is a great way to learn how to trade, because it takes away a lot of the issues that most people have trading retail. Okay, most people, very, very tough to do. That's why most traders fail. They fail. They don't know how to manage their risk. They don't have a confidence in doing a certain thing a certain way all the time. That's how you build confidence. All right. If you're just willy-nilly in there and you're doing one trade on a 4-hour chart, one trade on a 1-hour chart, you're doing a Fibonacci retracement sometimes. Sometimes you're using moving averages and you're doing that. Sometimes you're using RSI in combination with other things, or if you know technical analysis, you're using flag patterns and bear patterns and head and shoulder patterns. And you do so many different things, you never really get comfortable that any one particular style works all the time because you're always doing different things. What you do when you work with us is you're going to be doing the same thing all the time, every day. Every time you log in, you're going to be looking at the market through exactly the same eyes. You're going to have 4 basic ways in which you're going to use these lines to trade. You're going to do the same thing every day. One of those 4 patterns, sometimes 2 or 4, sometimes all of them in the same day. They all happen. Every pattern that we are going to show you happens every day, happens on every pair. Somewhere, somehow, it may not be happening when you're in front of the computer. Okay, if you're in the front of the computer 24 hours a day, that's one thing. Okay, you're not always going to be around when the high or the low of the day has been set. All right, it's unfortunate. Oftentimes it happens in the guys, excuse me 1 second, please. I just have to take a look at something quick. Hold on a second. Sorry. Guys, just bear with me 1 second, okay? Hold on. I have to check something quick. Some news just came across my desk. Oh, okay, this is not important. Sorry about that, guys. Sorry, it was a text message. I had to explain to them. Let me do a quick look and see if there are any questions yet on this. Okay, no questions yet. All right, good. So again, very, very important that you, if you're relatively new, anytime you try something new, you have to build your confidence. Okay, it's the old chicken or the egg theory, and you know what? And I say this a lot, and so unfortunately or fortunately, when you tune in every day, you're going to hear a lot of repetition. And the reason for that is because we only have a few core things that we think about and that we look at every day. So it's important that we point them out. So there is going to be a lot of repetition about what we do. Okay. So as I was talking before about building confidence, and I started to talk about the old chicken or the egg theory. Okay. So what came first, the chicken or the egg? All right. Well, in trading, what comes first, confidence or success? All right. Well, what comes first? It's very, that's a tough one. Well, clearly, if you have success, that will build confidence. All right. On the other hand, if you have a lot of confidence, that will help build success. All right. So the question is that we have to get you confident. Okay. In my opinion, confidence builds success. When you go into the market and you're trading, you have to have confidence that you know what you're doing. You have to have confidence that you're playing, that you understand the patterns. And then you just have to go into the marketplace, put the trades on, accept your risk on every trade. Don't worry if you have a loser or string of losers, because if the odds are on your side, then at the end of the game, you're going to prosper. And you have to have confidence, though, that when we show you a setup and we tell you that this setup is a 60 or 70% probability chance, you have to have confidence. And you're not going to have the confidence because we tell you. You're going to have the confidence when you do it and when it works out. So I want everybody to try and clear their minds. Clear their minds. If you've been trading, try and clear your minds of excess and old baggage. All right, because this is how we do things. You have to build your confidence. So we're going to show you the patterns, and then you're going to do the same patterns. Now, we're only on 1 hour a day here in the morning. All right, you have the whole day to sit in front of a computer and to trade on times that are convenient for you. Of course, you need to understand that there are better times to be involved in the market than others. Okay, there are active times and then there are quiet times. So, you have to be able to recognize that. You also have to recognize when important news is going to be coming out. So your goal, with as far as we are concerned, is very simple. Get in front of your computer every day and bang out trades. Not, don't not just flippantly, but look for our patterns. And you know what? And if you're not 100% sure that that's our pattern, put the trade on. Okay, you know what? Put the trade on. It doesn't matter, because you know what will happen if you start and you're right 5 out of 20 times. We don't care. How are your next 20 going to be? Are you progressing? So maybe your first 20 trades, you're 5 wins and 15 losses for whatever reason. All right, but maybe your next 20 trades, you're now 7 and 13, and then the 20 trades after that, now you're 9 and 11. Okay, and you're progressively getting a little bit better. Okay, and it doesn't matter, because this is a demo account. It's not real money. It's not your live trading capital. It doesn't matter that you lost 5 out of your first 20. You don't have to make that up. Okay, it's irrelevant. It's demo. It doesn't matter if you lose, if you lose 10 out of your first 40. You don't have to make that up. What's important is not the first 10 you trade, or the 30, or the 40, or the 50. It's always the next 10 or 20 or 30. Are you progressing? Okay, so try and do a lot of trades. Try and do at least 5 trades a day. All right, and don't worry about your results. Just use our patterns, try and do it. See what your results are. You're either going to be right or wrong. It's much easier to gain confidence either being right or wrong than when you're using, 7 other technical indicators, and you're using all kinds of different plans and thinking for every trade that you do. You never know if what the odds are. You never know if you're applying anything consistently right. Very difficult to build confidence under those circumstances. So with us, it's a 1-loss record, and you're always grading yourself. And so you're just going to keep trading and trading and trading, okay, until you keep building and gain confidence, and you build your winning percentage. And what I commit to you and everybody on the call is we're going to help you get there. And so if you're with us and you do 25 trades this week and you're not doing well, and you do 25 trades next week and you're not doing well, you email us, okay? Either you bring it up on a call in the morning when we do this, if you have a particular question, or you email us, Michael@theamazingtrader.com, Jay@theamazingtrader.com, info@theamazingtrader.com, okay? Email us, tell us you're struggling. Tell us you've been trying and you're not doing well, all right? So that we can dig in and we can help you, all right, figure out what it is that maybe you're missing something. And so in order to do that, what I would ask you to do is, when you do a trade, take a screenshot. If you don't know how, please learn how to take a screenshot, okay, of what I want to see, the chart you're looking at, and where you put the trade on, okay? You'll have your buy and sell signals. You'll be using the buy and sell, okay? For argument's sake, here we go. I'm not doing the trade. I'm setting up a buy. Why? I don't know. No reason. I still think we're heading short. Or I don't know, but I'm not. But I'm just saying we're already down here. I'm not selling right now. We're very, very key lines down here. Okay, the selling area, if you were looking to sell down in Canada on the 4-hour chart, the selling area was up here. That was the key selling area. Now, will this maybe be a key selling area? It could be if we can continue down. I don't know yet. Which looks like, 4-hour chart. We have a unconfirmed line that's been put in. But don't get fooled by an unconfirmed line. This line can confirm, or it may not. The pair may run right back up into this area, okay, and take out this line before it has a chance to confirm. This line will confirm at the close of this candle, okay, assuming, okay, this is the first candle after, let me bring this up. Open it up a little bit, okay, so that you could see. So you could see that the unconfirmed line was formed when this candle closed. As soon as this candle closed, it set this line. Now, When will this line? This is very important that you understand. Okay. An unconfirmed line is not a confirmed line. Okay. And they have difference of value. Of a confirmed line is much more important than an unconfirmed line. This is a guideline. I don't know. Will this line confirm? I won't know if this line will confirm until this candle that we're in, which really closed at 9 o'clock. Okay, so we have until 1 o'clock. It only closed an hour and a half ago. Okay, so we still have 2.5 hours to go before this candle on a 4-hour candle is going to close. I don't know where the price is going to be when this candle closes, but if you think it can't, just because it's here, if you think it can't come back up here in this 4-hour period and take out this line, you're wrong. Okay. You cannot anticipate, certainly not with 2.5 hours to go. You cannot anticipate that this line will confirm. It's a good guideline. If it does confirm, it's important to know. We're going to be watching for it. I know there's an area here that selling came in. Okay, we moved up. That's what happened. Selling came in. So I know this could turn out to be an important line. But right now it's a guideline. That's all. So let's get back. What I said to you is so now here's my setup. Okay. Let me just do it again. Okay, let me just check, see if everybody's getting this, if there are any questions, no questions. Okay, guys, I'm assuming that you guys are getting this. But the very important thing is here, we are here to support you. Okay, so let's just see. So I went to put in a buy. That means I would have to put my stop loss. Let me move it. Oops, excuse me. Okay, so assuming it's, right now, assuming I was using these lines. Now, I'm not calling this trade, and I'm certainly not ready to buy. But what I'm saying is I now set up this trade. So assuming I'm out there, I'm one of you guys, and I think, okay, this is a good trade to make. Okay, right now. Now it's not for a couple of reasons. Okay, we're smack between the low and this previous high. We're right in the middle. We got 3 lines below it. We got 2 lines pushing down. We're kind of right in the middle on a 4-hour chart. On a 4-hour chart, there's no trade. The reason why I'm showing you this is because just in general, this is what your chart will look like when you set up a trade. So now if you're out there and you guys think, anybody out there thinks that this is a trade, and I'm not, by the way, you can go long here and you may very well be right. Okay, stop below here, the low of last week. The low could be in. This could be, just look, I mean, this could be this move up. It stopped at a previous line. Okay, that makes sense. Now it's moving down. But you know what? There's nothing to say, okay, that this has to continue moving down. This move may be happening. Move up, move down, maybe another move up this way. We don't know, right? So right now we're in the middle. So on a 4-hour chart, it's a tough trade. But what I'm saying is, let's just say you think it's a trade, you guys out there, right or wrong, and it may very well work out. But here's how you would do it. If you're thinking that this is a buy, you set it up, you put your stop below the low of last week. Very well could be a buy, by the way, a weekly low. Okay, is an important area, a weekly low. Now we're coming down to test. This is what's happening. Set a weekly low, moved up. Coming down this week now. We started the week with a burst up and now a retracement down. All right, where's this going? Technically, if I had to guess, when I say I had to guess, guessing is a bad word. My preference would be, if I were to do anything, it would be to go short. Okay, I'm just setting this up to show you what I would like to see if you want our help. So let's say you think you want to go long and you put your stop below here and your take profit is up here, and that's okay. And this is the trade you want to make, okay? Before you hit the buy button, take a screenshot, okay? Or even right after you hit the buy button, take a screenshot. I want to see what the lines on the chart look like at the time that you did the trade. And I can let you know right away whether that was a high percentage, a medium percentage, what was good about it, what was bad about it. So if you're struggling now, you know what? You might not even need our help. You may think you need our help. Okay. And it's going to sound funny, but remember, just because you have some losers or a bunch of losers in a row doesn't mean you need our help. Okay. A bigger sample size is what's important. So, come to us after 25 trades. Okay. If you're 5 wins and 20 losses, come to us after 25 trades. And then what I'd like you to do is start taking some screenshots and emailing them to me. And I will take a look, or Jay will take a look, and we'll see if there's anything obvious about what the pattern is or what the chart look like. Anything obvious right away. Because just because you have some losers in a row doesn't mean you did anything wrong. All right. And so it's important that we try and understand that you can have a right setup. Your lines can be right. You could have traded it right, but the trade didn't work out because the market moved, or buying came in, or selling came in unexpectedly from somewhere. An algorithm somewhere, or a bank algorithm came in, or big money came in from somewhere, or a country. We don't know half the time. Most of the time, we don't know what's driving the volume of the market. All right. What we see is that there is volume driving the market. We don't care where it's coming from. We don't try and understand it or analyze it, or try and get that into our decision-making process with the trades. We're looking for money flow, trading flow, and the lines are telling us when there's money coming in, either long or short, and kind of where it's coming in at. And that's what we care about. We don't care specifically what the news was. Okay. We just want to see, I don't know, the CPI came in this. I'll get back to that in a second. I don't want to jump around. Okay. So anyway, this was dollar CAD. This is a 4-hour chart, and I spent a lot of time on it just to show you, because we have 2 trades. Okay. Right away, I'm going to show you 2 trades that we look at every day. Okay. Now let's go. This is a 4-hour chart. All right. Let's go to a 1 hour. Well, you know what? Let's see what else is going on in the market. Hold on. Let me just take another look in the market, because I'm not going to trade the CAD. EuroCAD. Yeah, look at the EuroCAD. Let's just take a look at EuroCAD. Look at EuroCAD pushing up on the 15-minute. Okay. So building ladder trades. These are our ladder trades. When you see red lines building, this is a ladder trade. These are trades that we look to get on. Okay, getting into a trade with a stop below a key red line, moving up. And if you would have noticed, every time you would have put a trade on somewhere after a line, when this line forms, if you put a trade on with a stop below this line, okay, no matter where you are, what time is it? 10:45. Okay, hold on. Charts are resetting. This is a ladder trade. This is one of our key trades. We look for areas, ladders building. When a ladder confirms, not when it's unconfirmed. When a new ladder confirms, okay, then we can put a trade on, a stop below, as long as you have room above. And there was plenty of room above. Okay, there's no obstacles here. But let's look at the 1 hour. Just sheet for a second, because this is beautiful. Okay, now we're in EuroCAD. Look at EuroCAD strength. All right. Any reason to go short? Is there any possible reason to consider going short EuroCAD? Okay, right this second, no. However, does that mean you go long? Well, the point is, the way we trade is you have a long bias, but you have to find the right area to get in. Just because something looks like it's very strong, we don't chase. I'm not buying right here. I'm certainly not selling. There's no reason to sell. There's no red lines. Let's look at a 4-hour. Let's just see what's ahead of us. Okay, look what's going on. We're taking out previous blue lines. Okay, that's a sign of strength. But we have another one kind of right up here. We stopped right at this blue line at 47.85. Okay, and backed off a little bit. So we're now, okay, look what's going on. Okay, ladders building. These are old lines. At one point, ladders were building down. Old lines. What makes them old lines? Because this move came down to the low, as it starts the retracement, now we're working off the low. Okay, as it starts its retracement up, old lines, all the lines that were formed, the blue lines that were formed on the way down in a move, prior to it starts to move up, makes these all old lines. These, okay, this line, all right, is not an old line, this blue line, because this line came after the low. We're looking at preceding lines. Very important to understand that distinction. Let me pop in. I see a question. Let's just take a look. Oh, okay, Jay. Okay. Oh, Jay, you're just answering that question. Is that it? Okay. Jay, Ralph looked at Euro Yen yesterday. Okay. Yeah, we can get to the, okay. Hang on a second. I don't know if he's even on, is even on the call this morning. Hang on a second. Okay. Important. If you're on the call, sir, okay, then what Jay spoke about with you yesterday kind of holds true. So remember, preceding lines, because here's the move. Okay, look where all the lines are. Okay, this is the area that we're playing in now, right? You have blue lines, red lines. So this is the field. This is your football field. Look at it that way. Okay, where the blue lines, red lines, and we're not worried right now anything back here. Okay, this is the field we're playing in. Okay, we had a high on a 4-hour chart 3 weeks ago. We had a low early last week, okay, on the 4-hour chart. So this is the field we're playing in on the 4-hour chart. This is where our basis of analysis is. And right now we are square between, okay, the high, the low, and we're right in the middle. Now, we're in the middle, but I have a bias on EuroCAD long. All right. However, now, if I want to trade off of the 4-hour chart, by the way, you could put a long, just show you. If I want to trade off of a 4-hour chart, open that up, put a long, okay, over here. Hope you guys see that. Stop loss is here below this red line. Okay. Now, why? Why below this red line and not this red line? Because this red line, okay, also touched here. Okay. We're still in this move up. If anything, you have to put the low right here of the week. So this is where your stop loss goes. Okay. Not here. It goes here, the low of the week. Okay. Because here on this move up, now look what happened here. Okay. I want you to understand this because this gets a little tricky. Look at the difference between this line and this line. Okay. So what happened? Okay. We had a move up, a little down, another move up, down. Okay. Now here was the high, right? In this move here. See, in this move we're looking at a retracement. Here was the high. Okay. Came down here. All right. That's this line. Okay. When did this line become really important? This red line became really important when this line broke. Okay. Does that make sense? Because why? Because this line created a new high in this move. Here's the move. Here is one high. Here is the new high. The low before the high, okay, if this is the high and this is the high, the low point is here and actually here in the same area. Okay, when this line took out this high that made this red line, okay, the new key line, not this line. Why? Why is that? Okay, because it was this line that took out that high. Does that make sense? Okay. You had to take out this high for this for the closest red line to become important. Okay. So even when the pair was here and we came down here, this was a red line, okay? And it was a line that I'm watching. It was a line that I'm watching in a stair step, but it was not the key line, okay? Why? Because it was after, all right? We didn't set a new high. See this line? When this line came up here, it's moving up. It didn't set a new high. So all the way, this red line was here, but it was not the key line. The key line was the line before the high. Okay, so all the way along here, all right, this red line was here. But that's not our dominant key line for a trade. Okay, came down here, moved up, set a new high. So it was from here that it set a new high. That's now that turned this line right here into the key line. Why not this line? Because this move up didn't take out this line. We didn't set a new high. So because this one came down, it's still part of this move. I hope that makes sense. Very key where a new high. If, okay, let me show you something. If this area here would have extended up here, if this move would have come up here and taken out this line and set a new high, if it would have done that there, and then so all it had to do, if it would have been a little bit higher and come up here, okay, and taken out this line, if that would have happened, and then retraced down to this red line, and then this red line stopped, this would have been your key line, because it took out the line, it took out the high. You would have come down here, this line would have formed, but it only would have become the key line, okay, if it took out whatever line this was. I hope that makes sense. These are subtleties. This will come to you, I promise. As you learn how to look at these lines, this will come to you, okay? Understanding a previous line and the importance of a previous line versus just any line. So big picture, looking at the 4-hour chart here, you know, you're right in the middle. Okay, if I had a bias, you know, you'd have to look back. If you had a bias, your bias would have to be just take a look at EuroCAD. Okay, move up. Just watch how things are flowing. Little retracement. Move up, retracement. Move up, retracement. Big move up, retracement. Move all the way up, all the way up. All this is, if you're just looking at this chart right here, all open like this, we have a big move up, and now we're in a retracement. Okay, that's all this is. When I say all, for right now, this is a retracement, as big of a move as that is over 3.5 weeks. Okay, all that is a retracement coming back from all the way here early February. Okay, that's what this is. So honestly, you know, when you're down in this area already, okay, when you have this kind of pattern up, okay, your bias would be, when this thing held, this was a great trade to move back up here, okay? Now we're stuck kind of in the middle. I don't know which way it's going to go, okay? Don't know. So on a 4-hour chart, don't know. If you had to pick a bias, a real bias, you'd have to say your bias is long because of everything that's going on here. And you can even go out. Let's look at the day. Excuse me. Let's look at the day chart looks like. Okay, makes it a little easier, even. Okay, red lines pushing up, pushing up, pushing up, pushing up, pushing up. This is a great. Okay, here's your trades. Okay, now there's a day chart. Okay, you could, by the way, once again, you could use a day chart. Your position size will be smaller. The problem is that if you're trading a prop account, which many of our clients are, because our system is set up to really help prop traders the way we use our risk reward. But if you're trading with a prop account, 99% chance that you're trading, you have to get out of your position by the end of the day on Friday, right? You can hold a trade overnight, generally, with most places, but with most places, you must be closed. Your position will be closed at the end of the day, Friday. So if you're trading on a daily chart, all right, and today is Wednesday, you know, a daily chart could take 2 weeks play out. All right. A 4-hour chart could take a week to play out. So if you're trading prop money, you can't really use a 4-hour chart as a place to, or a daily chart when you come to Wednesday or Thursday or middle of the week or on. You can't be entering trades on those time frames because your trade won't have enough time. Now, it might work out, but it probably won't have enough time to work out. You may be forced to exit your trade at a loss at the end of the day on Friday while you're still in the middle of your parameters. You may not have hit your stop loss. You may not have hit your take profit. You may be down a little bit of money, and your plan could still be playing out. And the following day could be a good day for you because it's still within the parameters of your trade idea, but you're forced out of your trade at the end of the day, Friday, and who knows where your position is going to be at that time. So, it's another reason why we use 15-minute mostly. I use 15 minutes, sometimes 30, sometimes an hour. That's me. I generally prefer 15-minute. But when I teach, I show you wherever there's a pattern because whatever you're looking at, it's exactly the same way. Okay, exactly the same way. Hang on a second. Okay, take a look. So what do we have here? Now, this is the daily chart. And it smooths, it's daily charts take out a lot of the noise from the 15-minute charts. You clearly have a move up. Last week, we had a directional indicator put in right here. Okay. Starts its move down, which is fine. Came down here. All right. Set. Well, hold on. Set. First, it came down here and set a red line. Okay. Now, is that red? What does that red line mean to you? To me, if anything, a possible area to buy. Why? Okay. Well, because is this your key area? No. Okay. Why is that? Because it's after, here's your move up. This red line occurred after the high. Remember, looking at the big picture, this red line occurred. See, what happened is here was the low before the high. This is your key line right here. All right. Anytime we start a retracement down, all right, that retracement needs to be played or could be played, or you have to be out of it before you get down here. So if we're following our stair steps, we had a move higher, we had a retracement, we set a new line. We had to move up to the eventual high. Okay, this is last month. Excuse me, this is last week. Oh no, I take that back. This is last month. Excuse me. Sorry, this is last month. We set a high. I forgot I was on the daily chart. And then we started moving down. And where it's going to stop, I don't know. There's going to be retracement somewhere. If this move continues, then this move will retrace down into here somewhere. All right. And then we would look to possibly get long. Okay. On the daily chart. Does that make sense? So as of right now, if you wanted to go long, which we're not going to do, you got to use the previous low before the high before you put your stop in. Okay. So your stop's got to go below here. This red line, not important right now. Not when you're so close to other blue lines. All right. If, and I say if there were no more blue lines up here, okay, that I wasn't coming up against, I might think a little bit differently. Okay. I might use a closer red line. Okay. But you should understand. Now you can use this red line. Okay. You can, you know what? We came up, we consolidated, formed another red line. You can use that red line to go long. I don't want to confuse you. Okay. Understand though, there are A+ trades, there are A trades, there are B trades. Okay. I'll do all of it. If you wait around all day for the perfect setup on what you're looking at, you could be waiting for a long time. So sometimes, you got to be a little bit more aggressive. Okay. So when you see a huge move up like this, okay, consolidation starts a new move up, everything retraces. Okay. Everything. Nothing goes in a straight line. All right. Move up, retracement. So this is your key line here. This is the low, right? Because here was a high, came back down here. Here was a high. So if you look at this, look, this high, the next high is here. Where are your two highs? Here's a high. Here's your next high. All right. Well, what's the low between those two highs? Here's the high. Here's a high. So what is the low between those two lines? Well, here's the low between the two lines, right? This is the lowest point between these two highs. That makes this line key. So now you have to know that this is your critical line in the sand. Okay, why? Okay, so this is coming down. I know that if I'm going to be short anywhere in here, I got to make my money and be out before this line comes in. Let's just look at it that way. Okay. Now I'm building. So, and I know if I'm going to go long, my safest trade, now hear me out. My safest trade is go long, put a stop below here. Okay. If I'm going long, but you're going to have to go way up here. You're going to have to take out last month's highs in order to be able to get your take profit. So it's rough. The better trade. Now, look at this. What you're hoping for, but I don't know what's going to happen. What I would be looking for is a further retracement down. In other words, here was an area where you could have gone. In other words, here you had the low, you set another high, you came down, you set another red line. Okay. Now, here in this area, maybe you could have had a good area to go long because you had this room all the way up. Once you're already over here, you have too much right above you here to go long because you have to put your stop below here. And in order to go long, you got to take out these lines. All right. And especially on a daily chart, those are key. You want to take out last month's high. Okay. I don't want to have to put on a long and have to take out last month's high. And I take that back. Not last month's high. That's the daily. Let's look at the weekly. Okay. Look what's going on here. Okay. Here's the weekly. Okay. So a weekly is you're taking out, which high do you got to take out here? Right here. And then right above it, we're back into going into 2021, June, July of 2021. Okay. These are now yearly separators. Okay. Because this is a weekly chart. Okay. Look at last year. Started high, down, moved up high. Oh, excuse me. Sorry, fellas, ladies and gentlemen. Sorry. Okay. Let's take a look. So I want to get back. Let's go back to that 4 hour again. Okay. All right. Let's see if there's anything. It's 5 after 11. Okay. So our time is done. Let's see. So I'm getting rid of first of all, I'm getting rid of the CADs for right now. I want to go buy dollar CAD is wiggling. I don't know. I'm going to not look at that for a second. And CAD yen, let me see what the CAD yen is looking like. Here's the 15-minute. We have a directional indicator. Okay, here we go. Okay, this was earlier in the day. Now look, okay, directional indicator, high of the day. All right, there's a 15-minute chart. Was one of our trades, a directional indicator, right? Directional indicator, high of the day, came down, came up, set a blue line that was lower than the previous high of the day. Directional indicator. Next to me, from here, anywhere from here, your next move is short with a stop above here. Once you have your directional indicator. Then we formed the third line, and the third line even pushed things further down. So here was a very, very, very easy trade. Okay. Now, here are we now? What are we looking at? We have a new directional indicator at the low of the day. Okay. Now, a lot of activity today on CAD Yen. I don't know where it's going. Okay. We have a directional indicator. And the good thing about this directional indicator, okay, now you didn't buy it. Okay. Now, very important lesson here. And then I'm gonna go very important. I want you to see this. Okay. So we do have a directional indicator right here. Okay. Understand. Okay. It's very, very important to understand. In retrospect, sometimes things look so much easier and more obvious after the fact. Okay. But when things are happening in real time, it's not quite as easy. And you have to take a look and really see what's happening. Very important to learn. We always say, we use these lines. A critical thing is know when a line forms, unconfirmed, and then confirms. A line will form unconfirmed in one candle, okay? But it won't get confirmed unless that line holds by the close of the following candle. So this looks really easy. Like, boy, I should have put a trade on, and look at all the money I would have made because I have my directional indicator over here, right? Well, you got to understand that this line wasn't a line, wasn't a confirmed line. Okay. It started on this candle, right? So this line wasn't the confirmed line until this candle closed. Okay. And this, all right. And where did this candle close? All right. This candle closed up here. So this red line wasn't confirmed until this candle closed. So your price was up here when the candle closed. Now you're too far away from it. Now this happens. Okay. And that's why it's important. See, in retrospect, in hindsight, you're looking at it. Oh, directional indicator, put a long on, stop below here, move up. Okay. No, you weren't over here. You didn't have a chance to put a trade on down here. Okay, because this line only confirmed when the price was up here. So you were too far away from putting a long on when your directional indicator was confirmed. So in hindsight, it looks like, oh, directional indicator, move up, great, make your money. But you know what? When it's happening, this wasn't the line until this candle closed. Very important. So now the price was up here. So now the candle closes, the red line confirms, and then you say, I have a directional indicator, I want to go long, but no, you can't go long because you're too far away. Once this candle closed, okay, all the way up here, when this line confirmed, you were too far away. That happens. It happens quite a bit. Sometimes you have to keep an eye out for it. So now what's going on? Now we're moving down. We have a directional indicator. Okay, but I want to see kind of the overall trend. Let's just take a look at the 1 hour and tighten it up just a hair, just to take a look, right? We had all your directional indicator up here. You had your move down. Here was the low before the high. You know, this is technically a low before the high. You set a high, you kind of came down here. Another, and by the way, there's only just a couple, but there's a couple of nuance things that you need to know as far as I'm concerned, okay? When a line is created, I like to see it's more important it's created on a retrace, a line. If you see you moved up here, what you really all you had is a consolidation. You moved up, you consolidated a little bit. Okay, another red line was formed. Great, okay? I like to see a much more important line after a retracement here, after a retracement, okay? See this? Move up, kind of consolidation, form the line. Okay, I get it, okay? This is a retracement. This is not really a retracement, okay? It's a nuance of what we're doing. There's only a few nuances. Otherwise, everything is very straightforward. All right, so it's 11:10. Hold on, let me just see quick. I have a couple of questions. Look at Aussie New Zealand, 15 minutes. By the way, thank you very much for pointing that out. Let's just take a look. Hang on a second. And let me answer you right away. And for everybody out there, this is extremely helpful if you guys can be looking at other things that we're looking at. And if you see something that may work, okay, so let's just check out a new chart. Let's go to Aussie New Zealand, which I don't always use. Just check it out. And where did it come up? Where are you? Here we go. Let's just take a look. 15-minute chart. Looks like a short. Look, it looks like a buy right here on the retrace. Well, look, you have a directional. Let's take a look. Okay, excellent. What am I concerning? You have a nice move up. Okay, where is the key? Let's first things first. Where is the key low before the high on this move up? Okay, that's here. Okay, excuse me. That's actually okay. Move up here. That's here. This is a key line right now. You don't want if you're going to be long, you got to put your stop below here. Okay, so let's start with that. If you want to go long, all right. You do have your directional indicator, which is fine. That just means that for the time being, the top is in. You know, but until you take out now, this could continue to come down. Okay, this could come down. But until you take out this line, this one's even a little better, okay? a little better. But until you take out this line, I would put this, by the way, if you were going long, I would put a stop right below here. Okay, it's fine. But we do have a directional indicator. It is pausing down. We are in a retracement. Let's just see. Are we ready to pull the plug right now? When you have a directional indicator in, now you're coming down. You want to get to a key area? This is a key area. All right, clearly. And yeah, now let's just see what's going forward. Hold on a second. This is a great observation. Okay, let's just take a look. So, okay, now let's open up 1 hour chart. Okay, what do you got on a 1 hour chart? All right, well, I don't like this candle. You have a line over here. You're moving up. You're building your stair steps up. You do have a red line. You can put your low, your stop below here on a 1 hour for a continued move higher. You only have one line in. This is the high of the day. Do we know that the high of the day is absolutely in? I don't know. All right. We don't have a directional indicator up here on the 1 hour chart. So I'm not confident necessarily. So, yes, by the way, there could be a buy right here on the retrace. Let's look at the 4 hour. Very good observation. Very important when you say, okay, now let's just be cautious. Once again, okay, this is why you look at the longer term charts, even if you're going to trade on a 15-minute. Okay. Now, why? Why is that? Let's suppose right now you went long. Okay. You got a really, really key line right up here at 107.91. That's 30 pips away. Okay. Very key line, and another key line over here. Okay. Because remember, now this is a 4 hour chart. So this is last week. So you have last week's high right here. Not far away, 30 pips away. Okay, that that's going to be trouble. So any trade that you put on, you can't risk more than and now now very good sign. What time is it? Hold on. We're not going to get out until 1 o'clock on the this candle was at 7. Okay, so not 9 o'clock. So okay, this candle won't close. This candle won't close until 1 o'clock, which is another 2 hours away. So remember, this unconfirmed line. Okay, that's interesting, but all it is where this candle stopped. Now, what's very interesting, quite frankly, is that you have a very key blue line over here, last week's high. So down here, and once again, a perfect way to analyze a chart. I'm really glad that you brought up Aussie New Zealand. Okay. Because look at this. Big move down, directional indicator. Okay. Directional indicator. Moving up. Okay. Here's your directional indicator. Now we start the move back up. Now, where is it going to go? We don't know where it's going to go. What I do know is that if I'm going to play the long side, now remember, this is a retracement. Okay. Now, even though it's a 4 hour chart, things can move a while, but look what's happening here on the Aussie Kiwi. Okay. I mean, Aussie Kiwi has just been nothing but a free fall. Okay. For 1, 2, 3, 4, 5. Well, it had a big week down, second week down, big week, third week down, big week, fourth week down. Here, we started a little reversal up, came right back down. We went into this consolidation period here. Look, just consolidation on a 4 hour chart. Consolidation. Okay, never got above this line. Finally took its move breakdown. Okay, great. Now we had a directional indicator. This is one of our trades. Once this line was set, you can go long and you can put your stop below the low of the week and you could have gone long. Okay, very important. But I know that in a move down, that this right now is a correction. Now, a correction can turn into a reversal, and this could go all the way up here. I don't know. That's trading for you. We don't know. My point I'm making is that we had the directional indicator, so the area to go long would have been down in here. Okay, maybe even you came here, you came down, you set a third line, maybe even in here, but you had to be, okay, far enough away to put your stop loss below here and have plenty of room to take your take profit before you're going to come up to a key preceding blue line. So we have stair steps here, and that's fine, okay? But this is a retracement, and when you're playing a retracement, you got to be in, you got to make your money, and you want to get out because it's not a guarantee, but the overall trend will probably at some point in time kick in. Now, where will it break? This would be interesting. We have this move up. If I take out these two lines, okay, I am now looking at a possible extension up once I take out these two lines. So then the play becomes, once you take out these two lines, okay, let's just say from right now we move through. Okay, great. Now, if it keeps going, great. And if you want to manage your trade, the best way to manage your trade, okay, if you don't like the one-to-one risk, and by the way, there are times here when things are very obvious that I'm going to go for more than a one-to-one risk, okay, when you'll know. For instance, give you a for instance, again, looking at the 4-hour chart, okay, I got all this area up here. Now I'm up here. I'm a little careful about going long. I got to be out. Wherever you go long, we're at 107.62, wherever you're going to go long, okay, you got to be out before here. You got to be out there. Now, it doesn't mean this won't break through, but it's not a high probability trade to have to take your take profit by having to take out last week's high. Okay? I don't know. I'm going really long on this one. You know, I don't mind talking if you guys don't mind listening, I don't mind talking. Okay, to kind of get my point across and to make sure that you guys understand this stuff because it's very, very important. So you got to be very careful. So yes, the Aussie New Zealand, let's go back. This is how you analyze a chart. So here's your Kiwi, Aussie Kiwi, and you're building nice moves up. So based on this, you do have your directional indicator in. I am aware of that. That's a sign to me that, whoa, the top may be in for today. Maybe, not guaranteed. Okay, maybe. We don't know. Directional indicator clearly gives me pause that the high is in for the day. All right, pause. Now, if you can get a nice entry and you can get out before here with at least your one-to-one profit, fine. You know what? I would almost, you know what? On a 15-minute chart, I'm just saying you're playing it close, okay? But on, because it's not perfect, but it's actually not a bad trade, okay? If you could get in here, even over here, I'm not going to do it right now. It's late. I got to run. But let's just take a look. This is just an important lesson on just being patient. Being patient. All right, so this was, look. So this was a key low right here. Now I'm going to analyze this, okay? We had a big spike down after the news, okay? Came up, set a second line. That's cautionary. It's pushing down. This line seems to be wanting to hold. If you wanted to go long, you put a stop below here. Your take profit is up here. You still have an opportunity to make it. I'm not so sure, you know, the high of the day is in. I'm being a little cautious. Now let's just look at the 4-hour. Okay. I'm just cautious because we're high. Okay. Now to go long, you know, I don't know. So I see a comment. This is important. I see a comment. Okay. Now, and I am not saying you're wrong, but again, from our same client who suggested the Aussie Kiwi. Further on, and I loved everything they said. Okay, look at the Aussie Kiwi. I did. It looks like a buy right here on the retrace. I don't argue that on the 15-minute chart there's a potential buy there. Okay, but then the last thing that they said to me was, and I think it will run the stops on the 4-hour chart. Okay, boy, I am not a big, not a big believer. All right. I'm not saying that can't happen at all. I'm not a believer in running stops. The only place I'm a potentially believer in running stops is at the very high or the very low of the day. Running, and when I say that, I don't believe in the thinking of running stops. I don't let the idea of running stops really enter into my trading decision. Although you very well may be right. And there are stop hunts and stop runs that occur high or low of the day, even sometimes at key areas during the day. And so I am not going to dispute that at all. And you very, very well may be right that we're going to run stops above the 4 hours. Okay. I wouldn't, that's not how I play. I don't play. Okay. I don't recommend. Now, you guys, if you have trading experience and if you're just looking, you're looking for us to help and to give you guidelines and to use the Amazing Trader as one of the tools that you may look at. Okay. If you're someone who likes and has had experience, this is important. Okay. Very important. And I'm directing this specifically, well, to the class, but to the client who wrote this. If you have experience with trading and running stop areas, that's good for you. Okay, that you've had success with, go for it. Okay, go for it. I absolutely don't want to discourage anybody who that has worked for. Me personally, I respect the lines. Me personally, okay, I expect every key line to hold. That's my expectation. I expect every key line, a previous high before a low, a major line, I expect that line to hold on the first attempt there. I am not looking to say, we're going to break through this. A key line will hold. What I will do, okay, and this may be a little frustrating for you because it requires patience, okay? Now that we're up here, now down here, you had plenty of room, okay, to go long because you had your real key area back up in this area, okay? So you had a real opportunity, you had a lot of room to get in before you came up to something major. Now we're up here, okay? So now we're up here, and you know what? You don't have a lot of room before this is going to test. Not only don't you have a lot of room, we have a unconfirmed line that's here now, won't confirm for 2 hours, and clearly this can continue its move up. No question, at which point we'll erase this before it ever confirms. You may take this out. I'm looking at a very key high. I am looking at a red candle that's now kind of starting to head down, moving away from the unconfirmed line. All right. And I'm saying to myself, I'm not really looking to go long right here, right now. Okay. Because there's just not a lot of room. When you're going into a retracement, big move down here, we had a break. What I would do is I would wait for a much longer pullback. Okay. Let's suppose this line holds. Okay. This line is irrelevant to me right now. And let's suppose this blue line holds, this line confirms, we start back here, we come down it back now into this area. Okay. And now we look to form another red line somewhere lower down here, which will tell me, okay, I now have an area to play against and I have room to get back up here. That's a trade. To go long for me up here right now is not a trade. All right. I take it back. That's not a high probability trade. It's not a classic amazing trader trade. Okay. But is it tradable? Yeah. So, you look at the 15-minute, just keep going on it. You're looking at the 15. Okay. Big move up. Yesterday, low overnight low. Okay. And Aussie Kiwi was moving up. Look at the day it had yesterday, Aussie Kiwi. Look at that monster day. That's a great day. And what do we have? We don't even have a retracement. This is interesting. We don't even have a retracement. Look at this move up. And barely a retracement. This isn't even a retracement. Yeah, it's a retracement if you want to go long, but this is not a retracement at all of this move. Okay, there's a lot of power in this move. So as far as I'm concerned, you're thinking, now let's just look at this. I have a bias of Aussie Kiwi. Okay. I got a bias of Aussie Kiwi, just not the right time to trade it, if that makes sense. Okay. I hope that makes sense to you. So you're thinking, all right, very good. I don't think this is the ideal area to put on a trade to go long Aussie New Zealand. I think my bias on Aussie New Zealand is long, because we had big move up yesterday that barely when you have a big move up, all right, and then just not even a retracement, just a little consolidation, all right, that's powerful for continued bullish move. And now you had another move up. We had some news, spike down. You got this directional indicator in here. We are pushing down a little bit. Okay. I am up. I know I'm being repetitive. Okay, guys, but very, very important. I'm just giving you signals. Okay. All right. I'm pushing up against very, very key lines. Last week's high of the week. So while the 15-minute, looks really, really nice right now. Okay. This is the directional indicator at the high of the day is causing me a pause, because I don't know that I'm going to take out the high of the day right now. We may just consolidate. And then when I go to the 4-hour chart, all right, I see that I have to go, I have to break through here. So what do I do now? Okay, I don't know. What I would do, quite frankly, is that if on a 4-hour chart, if this line confirms in 2 hours, depending on where the price is, the price may be down here by the time this confirms. I don't know. But if this line confirms, then you have a short, okay, with a high above here, with this move continuing down. Okay. If you want to go long, believe it or not, now today's Wednesday and this is a 4-hour chart. Okay. If you want to go long, I got to see these lines break. Okay. Then wait for a retracement and then go long. Okay. Remember, we don't chase. We never chase. We wait for a retrace. We're always trying to wait for a retrace back, because when you get a retrace back to closer to a line, and you can put a stop below a line or a key line, then you don't have to go as far as you take profit. To make sense? I hope that makes sense. By the way, I am so glad that you brought up the Aussie Kiwi. Everybody out there, please, if there are pairs that you guys like to trade, that's great. I can't look at everything in a 1-hour class when I'm trying to teach and trying to maybe do a little trading and kind of showing you. And today's was a little off because we had CPI, which threw the market into total flux this morning. And then, but let's just take a look. So when you guys are watching something else out there and you can throw it in, it's great. So just to answer, you think it'll run the stops on the 4-hour? If you're not in the trade now, if you're in the trade down here and you kind of want to hold it, okay, if you're already in Aussie Kiwi and now you're coming up here and you think it's going to run stops and you want to hold it, fine. I just can't, I'm looking at it as if you wanted to initiate a trade right now. All right. And if you're going to initiate a trade right now, the odds that it may work, it's not something that I think has 60, 65, 70% chance of being a correct pattern. It could very, very well work, but no, this is not ideally what you're looking for. You're not looking to go long when you have to take out this previous high of the last week. Okay, not over here. When you were down here, you had your directional indicator, and now you started your move up, right? You had all of this room before you were coming up here. So there was an area where you can hop on the ladder. I am not hopping onto a trade right up here when I know I have a key high of last week right here. Okay, I hope that makes sense. All right, that's it for today, guys. Thank you very much. I know some of you have been requesting recordings. Quite frankly, the last week or two, I had a little trouble here on some of the recordings. We do have a database. What we're doing with the recordings, by the way, is every webinar that we do is going to be immediately sent to our YouTube channel. And every webinar will be posted in the YouTube channel for you to be able to go back and see. Today or tomorrow, I'm actually going to go back in. I want to check out some of the videos from the last week or two. Whatever came out good, some of them were garbled. I was having problems with my speakers. Whatever is good, we will post in there. Everything is fixed on my end versus the recording. Today's lesson should be recorded. And it'll be posted in the YouTube channel sometime later this afternoon, and we will send you guys all out the link to our YouTube channel. So thanks again for pointing out Aussie Kiwi. Let's just look at the 15-minute. What's going on? Nothing much has changed. Let's just see. We do have a little trend line here. We sometimes use these trend lines. Not the key. The horizontal red and blue lines are more important than these lines. Okay. So that's it for today. This recording will be posted. The key thing I want from you guys, okay? This stuff is just takes practice. It just takes repetition. And because you're using a demo account, okay, just trade. It does, like I said, you don't have to make up losses. All right. All you have to do is be right going forward. So do 20 trades. And if you're right 5 out of 20 times, it doesn't matter. Do another 20. And then if you're right 7, I know I repeated this. You want to build it up. Do another 20. Maybe it'll take you a few hundred trades. So what? Okay, till you build up and get the confidence and get the confidence. The more time you do something, the more trades you make. Okay, your success level will build. All right, and once we get you 55-45 consistently, okay, bang, you move right into either real money or your profit valuation account. Okay, that's when you do it. You don't risk real money. You don't risk your proper valuation money. You don't do it until you can prove to yourself and you get the confidence that you can be right 55 or 60% of the time using our patterns, and you make money every day. And the last thing I'm going to leave you, okay, is just look at this. Okay, let's suppose we risk 0.25% on every trade, and I get you to do 100 trades a month. Okay, and we get you to even 55-45. Okay, 55-45. Now, Al, you know what? Those are hard numbers to do. Let's do 60-40 because I don't have my calculator in front of me. It's easier to collect. So you lose 10%. If you're 0.25% out of 100 trades, you lose 40. That's 10%. Okay. If you're right 60% of the time, that's 15%. So all you got to do is 100 trades. Now, I don't want to say all you. If you could do 5 trades a day, 100 trades a month, and we can get you just being right 60-40. Now, remember, we're putting the odds on your side. Very important, okay? You know, this is not, you know, we're not saying you got to be right 60-40 with a 10-to-1 risk-reward ratio. Essentially, every trade you're doing is a coin flip. It's almost a 1-to-1. You know, it could just as easily go 20 pips in one direction versus 20 pips in the other direction. So we got to get you to 60-40. And if we get you to 60-40 and you could do 100 trades a day, 100 trades a month, excuse me, and we can get you at 60-40, that's a 5% profit every month on your account. Take out a proper valuation, take a $100,000 account, it's $5,000 a month. Okay, $5,000 a month. And that's that's at 60-40, and that's using 0.25%. Okay, now imagine this. You're really confident. Now you know what you're doing. Now you know that you're going to be right at least 60% of the time, 40% of the time. You're building up a little base in your account. What do? Now we pop you up. Instead of risking 0.25% on every trade, you risk 0.5% on every trade, a 0.5%. Once you know what you're doing, once you know that you can be 60-40, a 0.5% of a trade is no problem when you have a little bit of equity in your account. And now all of a sudden, those same numbers I just gave you, now you're making 10% a month. Okay, that's it. And you didn't do anything. You didn't become a better trader. You didn't learn anything new. You didn't all of a sudden become a superstar. You're doing the same thing every day that you've learned. And all we did was we just upped your risk percentage because you have the confidence that you're not going to have 20 losses in a row and blow your account. So we can risk a 0.5%. And now you're at 10% a month on your account. And that's $10,000 a month on a $100,000 prop account. Okay. And that's how we do it. Not by becoming a superstar trader, by being right 60% of the time, even 55% of the time, 55-45, 60-40. That's it. Do 100 trades a month, make some good money. Okay. Thank you, guys. Thanks for your time. I know I ran a little bit late on this, but like I said, if you're here to listen and learn, I'm here to talk and teach. So have a great day. and we will see you again tomorrow morning. Bye.